Take the dot-com crash. There, all those stocks were priced out on the come. The earnings weren't there, but all the companies were there, and the flash was very exciting. And then we crashed. Now, I think there were a lot of reasons for that crash. One key was Y2K. Um, Green, Greenspan had added a lot of liquidity prior to Y2K and then drained it. And I think that helped puncture the bubble. But the other crash was the '08 crash. And I think that is more similar because there, the housing bubble was alive and well and was earning all kinds of money. And what was interesting about that was housing prices didn't have to go down to cause the crash. They simply had to stop going up because um, appreciation was already built into the price.
Yes.
So I think that's the similarity now.
Yeah, we're in the same boat. We
We've
have so
seen
much
earnings,
news
we've
priced
seen,
in.
right? We've seen earnings look great, and you pay up for the multiple, and all of a sudden the earnings come out, so that shrinks the multiple. The earnings were good, better than we thought, and you're not buying at 50 anymore. You're buying at 25 PE. But you need really positive earnings to stay at this level. And if somebody comes out and disappoints, we're going down. Somebody big
Yeah,
comes out and disappoints, and
and
even if they don't disappoint, even if they just uh, don't don't meet these expectations, that's all it's going to take. The earnings could still be good, could still be fine, but if they don't match the expectations going forward, the guidance, we could go down a lot.
hey, everybody, welcome back to Markets and Madness. As we say, the place where we discuss the madness that occurs when economics, politics, and personalities all move in different directions. Tim and I today. How you doing, Tim?
Hey Fred, how are you?
Good, good. What are you thinking? I'm getting a little nervous.
Are you?
Equity markets. Yeah, I lightened up a few things this morning. Last couple of days, actually.
Stuff not to be nervous. I've been thinking about. I gave a presentation recently, and we talked about some of the big crashes. And I'm not really predicting a big crash, but I think it's worth looking at what was what the environment was like. Take the dot-com crash. There, all those stocks were priced out on the come. The earnings weren't there, but all the companies were there, and the flash was very exciting. And then we crashed. Now, I think there were a lot of reasons for that crash. One key was Y2K. Um, Green, Greenspan had added a lot of liquidity prior to Y2K and then drained it. And I think that helped puncture the bubble. But the other crash was the '08 crash. And I think that is more similar because there, the housing bubble was alive and well and was earning all kinds of money. And what was interesting about that was housing prices didn't have to go down to cause the crash. They simply had to stop going up because um, appreciation was already built into the price.
Yes.
So I think that's the similarity now.
Yeah, we're in the same boat. We
We've
have so
seen
much
earnings,
news
we've
priced
seen,
in.
right, we've seen earnings look great, and you pay up for the multiple, and all of a sudden the earnings come out, so that shrinks the multiple. The earnings were good, better than we thought, and you're not buying at 50 anymore. You're buying at 25 PE. But you need really positive earnings to stay at this level. And if somebody comes out and disappoints, we're going down. Somebody big
Yeah,
comes out and disappoints, and
and
even if they don't disappoint, even if they just uh, don't don't meet these expectations, that's all it's going to take. The earnings could still be good, could still be fine, but if they don't match the expectations going forward, the guidance, we could go down a lot. And I went to Grok today, and I asked Grok how how margined this was, and we are significantly margin. I sent you that email. Did you see it?
I didn't yet. No.
Let me see if I can read it. What Grok told me about that. I think it's worth reading. Just take me a second.
Yeah, I agree with all of that. I spoke to someone this morning who's bullish and excited, and the Fed's going to cut, and the housing market's going to rebound, and we're going to have great things going on. And there's so much positive expectations built up that it just takes a little bit to nudge it over the cliff. And I'm looking at a lot of stocks that are just at the tipping point. A lot of them are on at or close to all-time highs. The Flyers, you know,
Yeah.
Palantir, a couple of the others. I just looked at VGT, and that's on a long support line that goes back to the lows of April. I think it was April at 410. Where was it? It's yeah, the April low at 450, and we're at 700 now. So we've come a long way in VGT, Vanguard Technology Index.
Yeah, that one's a flyer.
It does.
It's at 700 right now, right?
Yeah, and if that breaks support, I don't know. Could we go down 50 points, 70 points, 100 points?
I can't really negotiate this the way I should, but I'm trying to look at cent. But anyway, it's really worth asking Grok what it is. Can you read it? Can you see it on your email?
Let me see. Has to update first.
I asked the question. I said, is the market over leveraged?
Yes, leverage in the stock market has increased over the last 6 months. As of August 15th, 2025, margin debt, a key indicator of leverage, has risen significantly, passing $1 trillion for the first time, with a 25% increase over the past year, much of which occurred in the last 6 months. Posts on X highlighted this trend, noting that retail leverage, including margin debt and speculative options trading, is at or above peak levels seen during the dot-com bubble and the 21 meme stock era. Additionally, global leveraged equity funds saw record inflows, $14 billion in April of 25, nearly triple the previous high from 2020, though a subsequent $45 billion drop in leveraged ETF assets year to date reflects volatility. Despite this, the overall financial system's leverage remains elevated, driven by both retail and institutional borrowing, even as some funds reduced leverage during market pullbacks in April.
So we got a leveraged market at all-time highs with optimistic earnings indications. Now, I could have said this 6 months ago. We may have. But it seems to me that people are talking about a slowdown here. The labor market seems to be slowing down, at least according to whatever figures we could rely upon. So it's not going to take much to push this thing lower. And we could drop 5%, I think, comfortably. And that represents a decent drawdown.
Yeah, to me, there's so much good news priced in. Putin at the end of the Ukraine war. That's going to be a positive. Fed's going to cut. That's going to be a positive. We're going to get more capital inflows. That's going to be a positive. We have so much tariff earnings. That's a positive. There's so much built in that it just takes a little to push it over the edge.
Let me ask you this. Suppose the Fed cuts 25. I think the market will be disappointed. I think they're expecting 50.
I think it'll be status quo, but I think that the bulls who are thinking you're going to get a big market rally will be disappointed. Not because the Fed didn't cut 50, but because the market hasn't rallied, 300 points on it.
Well, here's what I learned trading, that if you get good news and your market doesn't rally on good news, that means the longs are already there. There's nobody left to buy it. If we get good news and we don't rally on good news, we're going down.
Yes, that's my sentiment. That's why I'm lightening up. One of the flyers that I think we talked about it a while back, CoreWeave, had a big sell-off, and the fear is that insiders, the lockup period is over, I think their forward guidance is reduced, and that was one of the flyers, right?
Yeah.
So if their earnings are starting to disappoint, where's the next one's coming? And granted, it's not NVIDIA, it's not Microsoft, it's not Meta, it's none of those, but it's a flyer that's gotten a lot of attention over the last 6 months. And
Palantir too.
yeah,
Uh,
I lightened up some Palantir
I
today.
love Palantir. I still going to own it, but I wrote
Mhm.
some calls on it. Um, and if it's called away, I'll look to buy it back at some point.
Yeah,
But up here, it's just, it's, I mean, you could say, we could have said this 3 months ago, and I'm sure we did. This market's frothy.
this was 3 years ago. The stock was at 30, 40, and now it's at 180. you know, you just think about
The
where
earnings
it's
have
going.
justified the move up past 100, I would say. You know, but there's a lot of room between 100 and 180. You
Yeah,
know,
exactly. That's right. When I worked at Chase, we used to say there's 35 floors between here and there. You had to jump. So Trump Putin, you think anything special out of that?
well, he really can't make a deal without
Without Zelensky.
Zelensky.
Right.
And his problem is that, you know, it's two sharp guys sitting in a room. And what Putin's trying to do is say, okay, I'm not going to give you a ceasefire because that just gives Zelensky a chance to rearm. So ceasefire maybe under the following conditions. I keep this, I keep this, I keep this. And then you go to Zelensky, and Zelensky goes, oh my God, no, you can't have that, right? And there'll be this screeching and the whining. But what's interesting here is that there's a lot of variables that Trump can throw at him, like sanctions on India buying Russian oil, um, things like that. Also, the territories where he wants to mine for strategic minerals. So there's a lot that's going to be thrown into the pot here. But I don't see him coming back with a deal because he can't. It's not up to him to make a deal. He might come back with some good news.
Yeah, there was some I saw earlier in the week, and I think Lindsey Graham was talking about a land swap. So not necessarily Russia taking land one-sided, but taking something and giving something up. I don't know if Putin's willing to do that, and I don't know if the land is worthwhile at all. But
Yeltsin's Zelensky's the problem there. He won't want to give up anything that Putin has already conquered. But here's the thing: suppose Zelensky does agree to a land swap, and Putin takes some territories. He's got new positions from which to invade. So if he wants to break the ceasefire and go in, he's starting from a much stronger position. So Trump has got to figure out what penalties would be imposed should he violate the ceasefire. And I think that's the issue. Zelensky says, all right, he can have this, and now Putin is 150 miles closer into Ukraine for the next attack. Putin, what's non-negotiable in Putin's position is Ukraine joining NATO. He doesn't want to see that. But maybe that's the only condition that you can impose. Look, if you violate this ceasefire, Ukraine goes to NATO, and now you're at war with NATO. You realize that, right? Maybe that's what has to be imposed. And whether or not Putin would agree to that is hard to say. It's not easy. But
yeah.
I give Trump credit for trying.
Now I'm going to give you another question. I know you've been bearish on the dollar for the last several weeks. Do you think the administration is trying to engineer a lower dollar? And
Yeah.
then my second part of that question is, how does if you're a foreign buyer of U.S. Treasuries, how do you feel about that? Where the administration is trying to devalue their currency? Do you really want to buy that? You know,
Am I
buy
a
that.
trader or an investor?
Well, if you're the guy buying the auction, if you're China, Germany, Japan buying that auction, and you know the central bank or the administration is trying to engineer the dollar lower, Does it give you, my question, it really comes down to, is the back end going to rally higher? Is it going to see higher yields in the back end due to a weaker dollar?
If they feel that the Fed's lost its autonomy, yeah, yeah, that back end will back up, and not come down with rates. Um, you know, the problem has always been getting from here to there. With respect to the dollar, as I speak to you, I'm actually short some dollars. But and the idea was he's going to get Powell out. But now there's a crowded trade, so maybe we've seen all we're going to see out of it. Um, and even if we get bad news for the dollar, it may not react because a lot of it may be built in already. Market's already short.
But if the Fed lowers rates, does the dollar take a bigger hit?
Fed lowers rates by 25, the dollar goes up.
Dollar goes up.
Fed lowers rates by 25. I think that's already priced in. I think we need 50 to push the dollar down.
I just get the sense that Trump and Bessent are trying to engineer a weaker dollar.
I don't think there's any doubt about that.
And we've talked about the supply issue on the back end. The Fed controls the front. Is this really going to help mortgage rates? Is this really going to help the housing market? A 25 basis point cut? No, but I think a 50 basis point cut will be worse.
But it will help the debt because they'll move to the short end to fund the debt. And that $1 trillion interest payment we look at right now will drop by 200 billion.
The Robert Rubin trade.
Yeah. Yes, exactly right. That's the guy.
That's right.
That's
Rubin did it, and Clinton had a balanced budget. Look at me. Look at what I did. Remember, a guy I work with told me he took a statistics course, and the professor said, statistics and numbers are like an old hooker. If you look at them the right way, you can do anything you want. That's what it was back then. We balanced the budget. What are you talking about?
Well, I remember being at a conference and Larry Summers was speaking. And I asked him, I said, at a time you're asking the banking system to deleverage with higher capital controls, requiring higher capital to asset ratios, you realize that you're short funding the debt and you're adding leverage. And he said, well, we could handle the leverage. And we're the government. We don't really give a rat's ass what you think. He didn't go as far as to say that, but the way he said we could handle the leverage said all of that.
Yeah, exactly.
Like that.
What else is on your mind?
Arrogance,
Well, that's always been.
Yeah. What else is on my mind is we're at the point now where it reminds me of when I was at the bank and I would talk to the guys at the discount brokerage end. He would come into me and he would say, the lounge lizard lobby. That's what they call all of the short-term day traders who went there for screens because they didn't have their own screens back then. The lounge lizard lobby's gotten very crowded, meaning all the speculators are in, and they're all, and Warren Buffett said it best. When your cab driver starts giving you tips on the stock market, it might be time to get out of the market.
That's right.
Yeah.
That's right.
So it feels that way to me, but it's felt that way for a while. So
yeah, I think you have to. To me, I'm just going to be able to sleep at night.
Panic when everybody else panics, but try not to panic last.
That's right. That's so true. Yeah, I've taken some money off the table. I have some downside puts, and I get hurt on them every day. For the last week or two that I put them on, every day they hurt me when I look at them. But
I would rather miss a boat than get on one that sinks.
That's right. That's right. Yeah, I think going to cash at this point, it can't hurt because there's so much fluff. You've had so much gains since April. Just look at the VGT from 400 to 700. It's at a 40% move.
And you got decent stocks that haven't priced into this thing that are paying good dividends.
Mm-hmm.
So they pay you to hold it. And I don't know, maybe Merck might be one of those stocks. Merck hasn't joined this rally at all.
No.
The whole healthcare sector.
Lilly took a big hit earlier this week or late last week. Big hit. It was down, I don't know, 15% or something like that. 700 to 6 up from 750 to 6 and change. It's come back. It's up $30 today.
Yeah. United Healthcare came back too. And another stock that's making noise because Trump may pick the winner is Intel. Intel
Yeah.
went from 21 to 24, right?
And I saw somebody, there was a story that somebody bought 5 minutes before the close, something like 15,000 penny calls that expired the next day. And the market was up 10, Intel was up 10%.
Really.
So, bought 15,000 of these for a penny, and I don't know where it was, but if Intel's up 10%, I'm sure those penny
What a
stocks.
lucky break for that guy.
Oh,
Yeah.
geez. He just rolled the dice and look at that. Came up 7.
And his name is Nancy Pelosi, probably.
That's right. All right. Well, I think that was. I think we've shed some opinions here. We'll see what the market thinks over the course of some time. But
Okay.
you know,
Have a good
all right,
weekend.
Tim. Yep,
Talk to you
you
soon.
too.
Bye.
Bye.